Good morning and good afternoon, everyone. Welcome to the webinar of the Vietnam Equity UCITS Fund. I'm Quỳnh Lê, the portfolio manager of the fund, and joining me today is Hưng Nguyễn, the economist of Dragon Capital. And we are here to give you an update about Vietnam market and answer the questions that you have.
Okay, so hello everyone. So I'm Hưng Nguyễn, economist of Dragon Capital. So I will start our presentation today, webinar today. So my topic today will include in two parts. The first part is about where we are now today, about the macro, and I will start with comparison between 2022 and 2011. And in the second part, I will do some we'll list some factors that impact the Vietnam market now. So let's move on the first part. So in my first part, I will list three main criteria impact in macro right now, including the inflation, the interest rate, and the currency. So the first thing is about the inflationary pressure. So if we divide three main drivers for inflationary pressure, first one is external position, monetary policy, macro stability. If we divide it into 11 smaller criteria, so in 2011, all 11 criteria showing the pressure for higher inflation. But in 2022, only 3 over 11 show higher pressure for inflation. The first one is higher gas oil price, which increased 30% year over year. The second one in monetary policy group is about the currency depreciate 8.4% year to date. And the last one in the macro stability group, which is the fiscal deficit over GDP is 4.5% 2022. So about inflationary pressure, 2022 is less than in 2011. Only 3 over 11 criteria showing the pressure for inflation. But in macro stability in Vietnam, we have the current account deficit as around 2.3%, and it's well explained by, if you look deeper on the balance of payment, the current account in 2021 deficit is around 1% of the GDP, and 2022 is another 3 and 3.2%. But financial account is surplus. Financial account in Vietnam mainly contributed by the money flow from direct investment and indirect investment. So indirect investment account for the majority part, and which is forecasted to be around 20 to 22 billion US dollar this year. It's thanks to the supply chain shift trend continue to happen. We have some big names in 2022, like Lego, like Samsung, Apple, and the newest one is Boeing, the aircraft one. And another biggest one in the balance of payment is error and omission. So error of omission in 2022 is expected for around 20 billion US dollar. And that explains why Vietnam has trade balance in surplus. Remittances still around 9 to 10 billion US dollar this year, and FDI disbursement is still very huge amount. But the currency depreciates 8 to 9%. So error of omission explains the repatriation happen in Vietnam, and also the hoardings activity from FDI enterprise and the individual in Vietnam. Secondly is about interest rate. So deposit rate in Vietnam has increased by 200 to 300 basis points since the beginning of the year. But the inflation, as we discussed earlier, the pressure for inflation is not that much. So inflation increased only 4.4% year over year. So if the deposit right now in Vietnam is around 9%, and the inflation is just 4.4%. So it means that Vietnam still deliver the positive real interest rate. and it's around 4.5 to 5%. And for that reason, if the inflation pressure for next year is not much, so I think that's evidence so that Vietnam Central Bank will not have pressure to raise the policy rate in 2022 and maybe in the first quarter of 2023. About the currency, so in 2011, because the very high interest rate environment and high inflation, so the performance of Vietnam đồng devalued by 13.8% and were the worst performance in Asia. But in 2022, in your right-hand side, so Vietnam đồng has fallen by 9% year to date, but it's a superior performance versus some other currency in Asia. We outperform Indonesia, India, Malaysia, China, Thailand, Philippines. So we have outperformed in terms of currency. But the problem for Vietnam economies and the market right now is liquidity shortage. One of the strong indicators for liquidity shortage is the money supply growth, the M2 growth at historic low level. So in October, September 2022, the M2 is just 6.5% growth year over year. It's even lower than 2011 and 2012. So it's historic low level. The reason for low growth of money supply, I mean the liquidity shortage, is two main reasons. The first one is a sizable quantity of undisbursed amount sitting in the commercial bank from the state treasury. So that's the result of slowdown in infrastructure disbursement and public investment. So that amount increased from less than 5 billion in 2016, and in 2022, it's increased to 36 billion US dollar. So it's very huge amount, increased 30 billion US dollar in the last 6 years. And the second reason for lower money supplies, because the Central Bank of Vietnam, they did FX intervention. So on the one hand, they will sell the US dollar to the market, but on the other hand, they will withdraw the Vietnam đồng in the banking system and reduce the money supply. So undisbursement of state budgets and the FX intervention reduce the money supply in Vietnam. So the liquidity shortage also shows in the corporate bond market. So after the decree 65 and the Tân Hoàng Minh and Vạn Thịnh Phát event happened in Vietnam, so the liquidity in the corporate bond market has bloomed. The new instrument amount is nearly muted, and there's no new instrument in October and in November. It's very little amount. It's very little amount. So that makes the enterprise have faced difficulty in terms of liquidity. Previously, in the enterprise in Vietnam can approach the lending from the bank, the credit from the bank, or they can issue the corporate bond to finance for their project. But now, because globally tightening monetary policy, and the Central Bank of Vietnam also trying to tightening the money supply. So the corporate may face some difficulty when they approach the credit from the bank. And on the other hand, in the same time, they have problem with issuing the new corporate bond. So the liquidity shortage happen in corporate bond and in the Vietnam economy. So I think that's for the conclusion for the first part. The economy's foundation is far more solid than in 2011. So interest rate, despite its increase for 200 basis points in terms of policy rate, but because the lower inflation versus the previous time, so there's no reason for central bank to push the policy rate further from the current level. The FX is very solid performance, the inflation is well controlled, and we think that this year we will well manage below 4%, and next year is below 4.5%. But the problem about liquidity lead to the market impacts and uncertainty in the economy, and we think this is primarily the domestic issue, and which can be resolved by supportive policy from the central bank or from the government. But it may take time, and the structural uncertainty shouldn't impact the mid to long-term core growth of Vietnam, which is expected to around 6 to 6.5%. So let's go on to the second part, is what factor could impact the stock market. So if you look at the performance of VN Index since the beginning of the year, compared with the performance of S&P 500, so I can divide it into the two separate periods. For the first period, from the January to September, so performance of VN Index is quite in line and quite similar with the performance of S&P 500. So there's up and down, and it's based on the macro news like the world-related news, or Fed rate, interest rate, or maybe some other constraint or lockdown in China, for example. However, at early October, there's an event happened in Vietnam. The chairman of FAT will address it, and after that, the performance of Vietnam went to opposite direction with the performance of S&P 500. So as of today, VN Index closed at around 1,050, and it's around 30% drop from the level of January. And S&P just back to above 4,000 level. So that's because of liquidity shortage. That makes Vietnam performance to become the worst performance market in the world. Drop for more than nearly 40% in early of November to around to less than 900 points, and now we just recover back to 1,050. So that generates a very low level of valuation. So in terms of price to PER ratio, that's even lower than 2020 when the pandemic happened. In your right-hand side, you can see that the price to book value is dropped below the pre-COVID the COVID level, and only higher than the GFC or the banking crisis in 2011. And we observed two case studies, one in the banking and one in the property markets. So in the banking, the price to book is at very extreme low level. It's for ACB, Asia Commercial Banks, it's around 1 time of price to book, and for the Sacombank, it's less than 1 time. It's just around 0.76 time to book. And it's worth to mention that the valuation for Vietnam is around 1 time price to book is very low level, because in Vietnam we still deliver, banking sector still deliver ROEs at around 15 to 20% every year, and the net profit margin maintained at around 3.6 to 4%. So it's quite different to the structure and the operation for the bank in the Western country. The price to book is 0.2 to 0.3 times now, but there's involved in very complicated derivative market or investment banking or other stuff. The second case study is about the property industry. The price to book for Vinroof and Dexan is record low level. Vinroof is lowest ever, or Dexan is lower than the COVID level. But in Vietnam, the structure of the market in Vietnam, 85% come from the retail investor. And the retail investor, when they know about the bad news in the global market, or there's some rumor in the local market, they panic it and they sold everything they have at any cost. So that makes the valuation of Vietnam drop significantly, and the professional investor step in. So in 2020, 2021, and for the first 4 months of 2022, the foreign investor net sold around 3.6 billion US dollar. But since May of this year until now, the foreign investor net bought around 880 million US dollar. And especially in November, the foreign investor, they bought around 600 to 700 million US dollar. So that's a record high number of inflow from the foreign investor. So in conclusion, we think that liquidity shortage is the main reason for the market instability, and the market at the current level has reflected many risks at this price level. And valuation is near 2011 despite the very different in terms of macro setting, and that creates an opportunity for the very long-term investor. I mean, 7 years, 10 years, to build up and to strengthen their portfolio. So that's all about the market and macro. So let's move on the portfolio part.
Right, thank you, Hưng, for the macro and the market presentation. So now I will move to the fund. So okay. So first of all is some basic information about the fund. So for some of you that may not know the fund in advance. So we are talking about the Vietnam Equity UCITS Fund with the current AUM of 236 million US dollar. And this is the first and also the biggest actively managed UCITS fund that cover Vietnam. This is the open-ended fund with daily redemption and subscription. So you may know about UCITS. So we have some UCITS compliance that the fund needs to follow. 5, 10, 40s that on the holdings cannot be bigger than 10% of the fund, and on the holdings that are bigger than 5% altogether cannot exceed 40% of the fund. We mostly invest in listed equity, but there is also a gate of up to 10% of the NAV can be invested in unlisted market. The fund is started in September 2013, so we already surpassed the 9th birthday of the fund in September this year. The annualized return of the fund in USD net of fee is 9.8%. So just quickly update about the performance of the fund. It looked a little bit scared because of the current correction in the Vietnam market. Lifetime IRR of the fund at the moment is 9.8, but just a few months ago, if you look at this chart, IRR normally about 14-15% in USD, and even though we have this kind of correction, the IRR still almost single digit. Double digits, and we think that probably this is the opportunity to buy the fund at the very low, record low valuation that Hưng just mentioned, and that will make a better IRR if you look at the longer term horizon in comparison to the ETF available in the market. So we are showing here the FTSE, Deutsche Bank FTSE ETF and FANX ETF that I think they are widely open to foreign investors. You can trade it very, very easily, instantly on the market. And actually, they are receiving big inflow into the market currently, given the low valuation. So foreign investors seeing the value in Vietnam market at the moment, and they pile in. The easiest way is just go to the foreign ETF. Many foreign ETF are receiving 400 to 500 million US dollar in just 1 month. So in late of October until now. But if you look at the long-term IRR, long-term return of those funds for the last 10 years, actually these two ETF having no return at all. So Deutsche Bank merely at the 0 point, and then Van X is actually a little bit negative as well. So we think that with the actively managed fund with local expertise, local research capacity, for the long term, we definitely can deliver better return compared to the foreign ETFs. So this is just the quick update about sector allocation in the portfolio. So we divided our portfolio in 3 main themes. First of all is the urbanization. So we have property, banks, construction. The second one is the domestic consumption. So we have retailing companies, technology company, food and beverage. And the last one is something that can change on yearly basis, depending on the development of the market, the change of the new development of different sectors. So for the first theme, urbanization, we have property at 23% of the portfolio and bank at 17%. So some of you probably met the team a couple of months ago. You can see that the property exposure in the fund was lower compared to 23% at the moment. So given the problem, the incidents happening in Vietnam over the last months, we did actually cut down exposure in property and banks. But from mid-November, when we see that there is some relaxation in terms of credit quota and the government kind of return to support the economy, we use the cash that we have in the portfolio to buy back some property stocks that we already sold before. And when the panic happened, we can buy them back at a very distressed level. So we bought back a couple of property companies that have very healthy balance sheets. For instance, the 2 companies that we bought back have a cash level. So the real cash they have in the balance sheet is around 200 to 250% of their short-term loan. So it's very much capable to pay back all the short-term debt that I have in the portfolio in the balance sheet, even without the pre-sale that they can have gradually in the future as well. For the domestic consumer theme, we pretty much overweight in the index. Retailing is our strong conviction, and it has been there since inception of the fund. The 2 representatives are Mobile World and P&J, strong domestic consumption, strong recovery after COVID. Technology, represented by FPT, is the leading IT services companies in Vietnam. We can talk about details later, and then food and beverage as well. The last part of the portfolio is some you can say that it's more tactical trading. It more depends on the year. For this year, this is commodity play. So we have fertilizer, we have yellow phosphorus companies, exporters. Those companies have the benefit of low cost in Vietnam, export to the world with much higher international price. And those companies, because of the rally in commodity price, they have no debt at all, collect a lot of cash in the balance sheet. Some companies have cash level of 50 to 55% of their market cap. And then we also have energy and utility as well. Cash level is less than 10% at the moment. If you met us a couple of months ago, it was 16, 17 before. But now we reduce it down to less than 10%. As I mentioned, that we started to utilize our cash, and we would think that we will continue. We have a plan to continue to utilize the cash and lower the cash level to less than 5%. So this is like just the top 10 holdings of the fund. You can see on the names that we mentioned briefly before. In the last second line of the table, you can see the valuation of the fund is around 8%, 8 times PER for this year. Even if next year we are very conservative, given the tightening in the credit market and broadly global slowdown, we would be conservative to put a single-digit growth in the Vietnam market. For the fund, it is slightly negative because there was some one-off earning in this year, and next year it would be normalized. But given the PER ratio of the fund is at 7-8 times, we think that is still a lot of value in the stock that we are holding. So just quickly about the top holdings of the fund, P&J that we mentioned, the leading jewelry companies, Vietnam. You see the yellow line here is the monthly retail sales of the companies compared to the last 2 years. Really a big surge up because of pent-up demand, and we see that the customer of this company are not really impacted by COVID. Whenever Vietnam reopen the gate, they just go out and do their shopping. And then Mobile World is another good story. They have 50% and 60% market share in ICT, mobile phone distribution, and commercial consumer electronics products. Margin improved significantly over the years, and also they have a new business into grocery, expand rapidly, and also margin also improving significantly over the years. And we are expecting that they will slow down the loss that they're making in order to invest in Bách Hóa Xanh, and then they can turn into profit in the next 2 years. And with the turn from big loss to neutral or slight profit can help the holding companies a lot in terms of profit growth. FPT is the leading IT services companies. It's not a pure tech company like in the US. It has real profit and real revenue and profit, real cash. The IT services outsourcing businesses has been growing more than 20-25% per annum over the last 5 years, and we are expecting the growth will continue. Another thing is that they have their own university. They train their own people, and the university is making big profit as well. So if you spin off the university from the company, it also make a very good value for the company's valuation. And another example of companies that in our top 10. So Hado Group is the mid-size. Originally, it is a property developer, but already emerged as a renewable energy companies. So at the moment, renewable energy companies, renewable energy make up 60% of the company revenue and profit, and it have a pipeline to expand the capacity of renewable energy as well. But because of the origin, the market still perceive it as a property developer, and their share price already corrected just like other property developer, and that gives the valuation of the company as a very, very attractive level, given the sustainable and resilient cash flow it has from the renewable energy business. Some other commodity plays that we have mentioned, Phú Mỹ Fertilizer and the yellow phosphorus companies. Just look at the cash. They have 57% of their market cap is in cash. So you pay 100 dong for a company already have 50% cash in their balance sheet. PE is like 3 times, 4 times, still pretty much lower than emerging peers and regional peers as well. And they are paying like 13% cash dividend for this year. So regardless of the volatility of the euro price, with this valuation, we are pretty much comfortable to hold this as a dividend play. So that are some investment in the top 10 holdings of the fund. Probably we can have the Q&A section now. If you have any questions, then you can post it in the chat box or the Q&A box of the Zoom.
So I see there's some question from client sent to us today. The first question maybe for me, Chuyên. Could you give us your opinion about the impact of demographic factors in the rise of Vietnam and its status as emerging markets, and how these demographic factors will develop in the future? So I think that question for me. Okay, I will divide the question into two different parts. First part is about the demographic, and the second part is about the emerging market status. So right now in Vietnam, I think that the demographic, the people, the population is quite young. The average age for Vietnamese people is 33 to 34 years old. And for that demographic, Vietnam quite young and quite dynamic. We can easily adapt to the new technologies. So for that reason, the people using smartphone increase nearly double after 5 years. And that support for digitalization, e-commerce, banking, broker services. And the urbanization ratio for Vietnam is 37 to 38%. And we still have plenty of room to increase from the current level. And more people moving from the rural area to the city, or the expansion of infrastructure spending and city expansion, that will increase the number of urbanization in urban city, and also support for the labor force in some industrial park. So I think that the demographic factor can support to the labor factor and to support for the local domestic consumption. About the status for an emerging market, so now Vietnam is still is the watchlist for emerging markets, and the government set the target for 2025 to be upgraded to emerging market. But from now, there's a lot of things to do to be upgraded, because we still need to solve the problem about the FOL. Vietnam has discussed so many times about the NVIDIA, and now we just finished the M&A between the Ho Chi Minh and Hanoi Stock Exchange, and we evidence so that it may take for a few years to be finished and establish a separate division focusing on NVIDIA. And our forecast will be 2025 or 2027 for Vietnam to be upgraded to emerging market. The second question maybe for the portfolio. For the UCITS fund, please explain the ESG practice, and the second is about the stock quantitative and quantitative screen process.
Okay, so the UCITS fund, so we are one of the fund managed by Dragon Capital. So we have a lot of funds under Dragon Capital, and all of the funds follow the same practice, same policy in terms of ESG. So we have exclusion list. We also have a more detailed analysis in terms of ESG screening. Recently, we hired a separate professional ESG manager to help the portfolio management team and the research team to do more detail and go check with companies what they do in real life, whether not only on paper, but we go to companies and inspect the companies whether they are doing the thing that they tell us. So that kind of an upgrade help us to check the ESG standard more in reality rather than just paper. In terms of quantitative and qualitative analysis, I think we have to be proud that we have a biggest research team among other portfolio, other asset management companies in Vietnam. So we have a team of 12 analysts cover across all the sectors, and the analysts also have a smaller team so that they can support each other. So this team This analyst can be in banking, but they can be in real estate to have a kind of debate which is other and not be biased because they only know if they only cover one sector, they only know about their sector and they cannot understand the dynamic between other sector. So that's one of the strengths that Dragon Capital have. We also have a very timely communication with management of companies, have updated information. Whenever there is something happen with news or rumors, we can quickly call up the companies, even in the ESG event as well. So whenever there's anything happen with companies, we can call them up and check and do cross check. That is much more efficient than fund manager who live outside of Vietnam and cannot get that kind of access like Dragon.
Yeah, so just as a color to the answer of Quinn. So the Dragon Capital team, we have two main approach. So bottom up approach and top down approach. So for the bottom up, we have very strong relationship with enterprise and some government officer to double check the rumor and to get the news and to analyze the information. From the bottom up, we have the system to track macro indicator. And for example, 2022, when the key driver is the money supply. So after that, we already built a system to track the money flow in the market, money flow to the economy, and try to avoid a similar thing happen in the future. So we use the combination between the bottom up and top down approach to analyze the market. So the third question is about, I think that is a macro question. Do you see the correlation between China and Vietnam? So in regards to negative sentiment regarding China the last years and a half, how does this affect the market in Vietnam? So I think that this question is for me. With China and Vietnam, I think that fundamentally the economy has a lot of correlation. China is the biggest importer market of Vietnam. Vietnam import a lot of products from China. So China is the biggest export market to Vietnam. The second thing is in tourism sector, Chinese tourists account for 30 to 35% of total foreign visitors to Vietnam every year. And in terms of FDI, the Chinese company invest in Vietnam around 10% of total disbursement amount every year. And Vietnam and China, Vietnam sometimes learns some monetary policy or fiscal policy from China because China is the second biggest economy in the world and they is next to Vietnam. And the correlation between the China stock market and Vietnam stock market is quite high before 2015. But after 2015 to now, the correlation is reduced significantly because Vietnam now emerged as a replacer or the competitor of China in terms of attract the flow of supply chains or FDI. So when the Chinese economy have problem, for example, they follow the zero COVID policy, they lock down the economies, or they have problem when the ship and the harbor in China is full. So Vietnam benefit from that, and the investment from some other FDI company in 2018, 19, 20 increased significantly. We receive a lot of new investment from Taiwan, from Japan, and from Korea. And in this years, one of the biggest example I can show to you is about the Apple, because the Apple factory is closed in China now, and Apple have planned to ship more factory to Vietnam. So the correlation between Vietnam and China economy now it turned from positive in the past to negative at this time. The fourth question is about the portfolio.
Yeah. So yeah, I think a couple of questions about the cash level of the fund.
Yeah.
So normally in history, normally the cash level would be around 2-3% only, because we are the open-ended fund with daily subscription and redemption. So we need to have some cash reserve to service the redemption if there is any redemption. Just because of the high volatility of the market at the moment, we increased the cash level to 15-16% few months ago. So I remember around July, August, around that level at that time. And also during that time, we also have kind of trade from the investor as well. So at the peak, we have around 18% cash. And since the mid-November, we started to utilize the cash in the portfolio, and that's why you see around 9% of the cash now. So even though that we see that the valuation has been a very record low compared to the history, probably we should expect some volatility in the market, because the market already went up quite fast in the last week. Probably there would be some correction in the very short term, and we want to use that cash to be ready and buy the stock when they are correct. Right. Let's see if we have any other questions. There is a question about the government new support to the economy. Can you have any update on that?
For the support package from the government, because Vietnam, we have the problem about liquidity. So according to the news from in the market and from the market and some other rumor, so we received the news that the central bank might increase the credit quota to the market, which is expected to be around 1 to 1.5% in this week, and that amount of new credit quota will support the bank to buy back the corporate bond and to solve the liquidity problem for the enterprise. But I think that Vietnam can learn some lesson from Korea or maybe from Thailand or in China, that we need to establish a new separate fund. That facility funded by central bank or funded by the Ministry of Finance. So that fund will buy back the commercial paper or corporate bond directly from the enterprise to support the fund to enterprise. And another solution was discussed by the government is they try to strengthen the legal framework, and they will analyze what level they will enterprise and inject the money to the market. One of the channel they can inject the new money to the market is through the banking system. So they will pick some good bank and provide another additional credit quota to the good bank, and that good bank can buy corporate bond or can lend directly to some weaker company or maybe some stressed company to solve the problem of liquidity. So I think that it might take time, and now some enterprise they try to deleveraging by selling their asset and by pay back the cash to the bond holder, and we think that process might take time, and I think that's another 1 or 2 quarters to finish that deleveraging process.
Right, thank you, Hưng. So there is also questions about the foreign ownership of the stock in Vietnam. Hưng, did you mention that? So Vietnam is not an exception. So we are not the only countries in the world to have foreign ownership limit. There is new regulation over the years to help increase the foreign ownership, but there's still no trading mechanism for foreign investor to trade the FOS stock in Vietnam. So that's why Vietnam is still in the frontier market rather than emerging market. Even though we already qualify a lot of criteria for emerging market, and that's why Vietnam still have a lot of upside, because if the government can fix that mechanism, then probably Vietnam can be in the EM index in the next few years. You are asking about portfolio turnover. So portfolio turnover, if you look at the numbers itself, it is 60 to 70% per annum. But that is also because of the fund is open-ended, so we need to service subscription and redemption. So it looks like that we have relatively high turnover compared to the closed-end fund, for instance. But if you look at the top 10 holdings of the fund, there are many companies that have been there since inception, and we also have the same long-term horizon investment view. It's just because of the characteristic of the open-ended fund that we have a slightly higher turnover compared to the closed-end fund. The top 10 holding of the fund is around 50% of the portfolio at the moment. And in total, we have 35 stocks in the portfolio. Right, and the investor also asking about family-controlled companies. So Vietnam economy originally was controlled by state-owned enterprises. So over the last 10, 15 years, the government have tried to privatize state-owned enterprises and make them available to foreign investor management, the people who run the companies, so that now you see a lot of companies like Vinamilk, Sabeco, some bank like Vietcombank, they already owned partially by the outside investor, not the government anymore. Over that time, Vietnam government also opened the economy to private sector. So many entrepreneurs started their business 20, 25 years ago, and it's quite a young economy compared to other countries. So we opened up just recently. So that's probably the first generation of entrepreneurs that still in the market at the moment. So many of them still working for the companies. We don't have the second generation yet. So you might find some companies still pretty much owned by one family. But we think that over the time, given the development of the stock market, the participation of the public into the stock market, that will dilute the control of big families in the companies.
There's a question about the biggest risk you see for the market next year. I think that's the biggest risk for the Vietnamese market next year. A weakened demand from the global market, and that event might be triggered by the U.S. recession or some country in European area to enter the recession period, and the demand from those countries will reduce in that case, and that will impact on the export and import activity of Vietnam. But that because Vietnam, the total trade over GDP at more than 200%, and for very high exposure to the global market, so Vietnam will impact in terms of trade activity and impact on the current account and impact on the currency. So that's the risk. I think that's one of the risks for Vietnamese market. But also that fundamentally impact on the economy. But for the Vietnam stock market, we saw the opportunity, because when the U.S. market recession, that will create an environment for weaken the U.S. dollar, and weaker U.S. dollar, we make money go out of U.S. dollar and go to riskier asset, and emerging market and frontier market or some commodity will be the destination for that money. And we see that when the US dollar dropped, DXY index dropped under 108, some money starting to disperse to Vietnam market, and that's contribute to nearly 700 million US dollar of net inflow to the market in November.
Right. And probably you should mention that because of the higher FDI every year, so we would think that even with the slowdown of the global economy, Vietnam still gain more market share because hopefully we slow down.
Yes, so
slower than other countries.
In Vietnam, we produce some. We previously produced some high labor-intensive products like textile and garments or some machinery, very low-tech machinery. But now we produce very complicated products like phones, like MacBooks, like earpods. Next year we will produce EV. And recently, VinFast just export the first 1,000 EV car to the US. Right. We will produce a part of aircraft, Boeing aircraft, next year in Vietnam. So thanks to joining the higher value of supply chains, hopefully that in the next year that will compensate partially the impact from the global market demand weakening.
Right. I see a question about the exposure to brokers in the portfolio. So we have been cutting down quite significant the exposure to brokers, and actually we completely sold down one company that used to be the top holding in the brokers sector in the portfolio because it is involved in the corporate bond market. So we just completely sold down because we see the higher risk in the corporate bond market. At the moment, we only have one position in the broker, and that one has an advantage of doing investment bank services, and their revenue and profit would be more resilient compared to companies that have been enjoying the rally of the corporate bond market.
Yes. So I saw that we have around 5 minutes left. So there's time for the remaining 2 questions. The first question is about what would make the retail investor come back to the market. So can you solve that question? The reason that support.
Yeah. I think given the record low valuation at the moment, we see that because it has been, from our point of view, we see that the market is kind of oversold. You see margin lending, margin cut. So when margin call happen, the broker just sell whatever they can sell rather than looking at valuation or any reason to hold off. They just sell whatever they can sell. So panic selling happened, and that make the market was so much oversold. And so now we see that the margin level has been reduced significantly. We don't see a lot of pressure in terms of margin lending yet. Some margin call of big owners of companies already happened. And that's explained for the quick rally in the last 1 week. And given the more positive side from the government, probably some new grade quota and interest rate probably already stabilized, and we don't expect a big surge in terms of interest rate as well. And Hưng is talking about the less pressure on the FX as well. So even though it's not really all positive things, but the thing that oversold with the less negative and stabilization already make the market to rally. Normally the rally from the very bottom will have a lot of volatility, but it will be fast and quick and strong.
Yeah, so for the retail investor in Vietnam, sometimes when they see the foreign investor buying, so they also try to buy. Yeah, there's some kind of FOMO, they try to buy. And there's some signal from the solution from the government and specific action from the government. And also there's some signs of stabilize in terms of currency, in terms of interest rate. So that's support for the local investor to come back to the market. The last question is by how much has portfolio expected 2023 profits grow and has changed over the past 3 months?
So given the higher interest rate environment and the more tightening credit environment, we actually cut down our forecast quite significantly. So for now, probably very low single digit, and it can swing from slightly negative to slightly positive easily. But I have to say that we are at the conservative mood, right? So that we see that we think that you should not expect a high growth for next year under this condition. But valuation is already achieved, and there's positive side that Hưng just said. So that it probably, even though we don't see high growth yet, but it's good to have a position in the market. And then when everything is clear out, the corporate bond market is fixed, and companies just go back to the normal operation, then we think that Vietnam can maintain 6 to 7% GDP growth, and good companies can deliver higher growth than that.
Yeah. So that's the final question. So thank you for your time and your question, and thank you for your investment in our fund in the last several years. And if you have any further questions, please send the email to the marketing team of Dragon Capital. And it's from Hưng and Miss Quỳnh. See you next time.
See you next time.
Okay.
Goodbye.
Bye-bye.